My name is Michael Grandy, and I'm a professor at Providence College. I'm teaching an MBA class, MBA 603 at Providence College, and we're going to be talking about job order costing, specifically chapters 2 and 3 from the Garrison, Noreen, and Brewer textbook, 17th edition. So let's look at 3 problems. We're going to look at, the first problem we're going to look at is from chapter 2, and this is going to be problem 2-19. And let's read it, let's walk through it, come up with a solution. Again, these handwritten solutions will be available on Sakai, but I want to walk you through them, talk about them a little bit. So it says, High Desert Pottery Works makes a variety of pottery products that it sells to retailers. The company uses a job order costing system in which departmental predetermined overhead rates are used to apply manufacturing overhead cost to jobs. The predetermined overhead rate in the molding department is based on machine hours, and the rate in the painting department is based on direct labor hours. So we have a company that is allocating manufacturing overhead based upon departmental activity, specifically the molding department, which is based on machine hours, the activity base is machine hours, and the painting department based on direct labor hours. And then the problem provides some details, some statistical information, direct labor hours, machine hours, that will help you come up with the activity base or the denominator value in the predetermined overhead rate. And then they provide some information that helps you come up with the total estimated manufacturing overhead cost. And manufacturing overhead is oftentimes a mixed cost, which means that it has both variable and fixed costs involved. So you need to estimate total cost, which is fixed plus variable. They go on to say that Job 205 was started on August 1 and completed on August 10. The company's cost records show the following information concerning the job. So they're giving you direct labor hours for the job, machine hours for the job, and they give you direct materials and direct labor cost. That's not in question. So what we're going to ultimately have to calculate is the amount of manufacturing overhead to be included in each of these, in this job. So it's asking you to do 3 things, and I added a 4th item. It says, number 1, compute the predetermined overhead rates used in the molding department and painting department. Secondly, compute the total overhead cost applied to Job 205. And then what would be the total manufacturing cost recorded for Job 205 if the job contained 50 units? What would be the unit product cost? And then I went on further to say, number 4, assume the desired gross profit is 65%. What is the selling price? So let's first walk through step number 1, which is calculate the total estimated overhead. So this is total estimated overhead. Overhead dollars, right? So we're going to have molding, and we're going to have painting. So we have, it's going to be fixed plus variable equals total cost, or total estimated cost, right? So for the molding department, they said it was $497,000 in fixed cost and $615,000 for the painting department. So that's the fixed cost. And then it said, what's the variable piece? Well, the variable piece for molding, it said it's $1. Let me get some room here, apologize. It's $1.05. The variable cost is $1.50. Times 70,000 hours. The variable piece is 105. Total estimated cost, therefore, is 602. That's total estimated manufacturing overhead for the molding department. And then for the painting department, the variable cost is $2 per hour, and it's 60,000 hours. So that's going to be $120,000. Total cost $735. Again, fixed plus variable equals total. So that's step number one, calculate total estimated overhead. The second portion is to calculate the predetermined overhead rates. And again, that formula is what? Total estimated manufacturing overhead dollars divided by activity. So for the molding, total estimated overhead is $602,000, which we just calculated, 602, divided by the activity, estimated activity, 70,000 hours. The PDOR, the predetermined overhead rate, equals $6.20 per hour. For painting, the total estimated overhead was $735, which we just calculated, divided by the total number of hours of 60,000. The predetermined overhead rate is $12.25 per hour. And that's how they're going to allocate overhead. So the next question is calculate manufacturing overhead applied. And manufacturing overhead applied equals the predetermined overhead rate times actual activity. Actual activity. So for the molding department, we're going to have a rate of $8.60 times the actual activity, 110 hours. Let's remember, they're using machine hours, right? Molding department's using machine hours. So those are machine hours. So the amount that's going to be included there is $946. And the painting department uses direct labor hours. And that rate was $12.25 times 84 hours of actual activity, 84. And those are what? Direct labor hours for a total of 1,029. So this is the manufacturing overhead applied to this job from both departments. And the last step is going to ask you to calculate product cost. So what is the total job cost? We're going to have molding, we're going to have paint, we're going to have total, direct materials, right? Good product cost includes direct materials, direct labor, manufacturing overhead. And they gave us these numbers here in the problem, 770, 525, and you just calculated 946 for a total of 2241. And then the painting they gave us at 1332, 1470, 1029, which you just calculated, for a total of 3831. We'll just add these across, 2102, 1925, 1975. Total cost $6,072. That's the total cost. So we're looking at cost per unit. So you're taking the total cost of $6,072, and they said they manufactured 50 units. Cost per unit, $121.44. Cost per unit, $121.44. So I went a step further, and I asked you to calculate the selling price per unit. And again, I added this to the problem, and I said the desired gross profit percentage is 65%. So if the company has a desired gross profit margin of 65%, that means that their cost percentage is going to be 35%. So to determine the sales price, I gave you this formula. It's the cost dollars divided by the cost percentage. So the cost dollar is $121.44. And the cost percentage, if the gross profit margin is 65%, then the cost of goods sold is going to be 35%. We're going to divide it by 0.35. The selling price should be $346.97. This is not markup on cost. This is using a desired gross profit margin. So that is problem 2-19 from chapter 2. What I'd like to look at now is a problem from chapter 3, and specifically this is exercise 3-4. So this is exercise 3-4. And this is a simple problem working with the manufacturing overhead T account and just kind of looking at how to resolve it. So let's read it. Osborne Manufacturing uses a predetermined overhead rate of $18.20 per direct labor hour. This predetermined overhead rate was based on a cost formula that estimates $218,400 of total manufacturing overhead for an estimated activity level of 12,000 direct labor hours. So even though they gave you the predetermined overhead rate, you could have easily calculated it by taking $218,400 divided by 12,000. It goes on, the company actually incurred $215,000 of manufacturing overhead and 11,500 of direct labor hours during the period. It goes on to say, determine the amount of underapplied or overapplied manufacturing overhead. So what's crucially important here is for you to understand this account. Manufacturing overhead. I've said it before that this is a balance sheet account. I call it a temporary inventory account, and I mean temporary because you got to close it out on a regular basis. And more importantly, the debits in this account represent actual costs, and those actual costs represent indirect material, indirect labor, and other factory costs. The credits to this account represent applied to work in process, transferred to work in process, based upon a formula. Manufacturing overhead applied equals the predetermined overhead rate times actual activity. By nature, this is an estimate. It's an estimate because the predetermined overhead rate is an estimate. So in essence, what you have here in this account is a comparison between actual cost and estimated cost. And you know the two will never equal each other. You may come close, but they'll never be equal to each other, and therefore you need to resolve it. Because if you have a net debit means that your actual costs were greater than your applied to or estimated costs. If you have a net debit, that means you underapplied. You didn't put enough cost in your product. If you have a net credit, that means you overapplied. That means you put too much cost into your product. So let's look what happened here. So they again went on to say the actual costs were $215,000, And the applied to were what? The predetermined overhead rate was $18.20 times the actual activity of 11,500 hours. The amount applied, 2093. We want to take a net amount. Our debits are greater than our credits by $5,700. That means we have under applied, did not put enough cost into work in process, right? Because that's what this manufacturing overhead applied is. It's a debit to work in process and a credit for 2093 to manufacturing overhead. So what are they asking? What is the company's accounting policy? So it goes on to say, assume that the company's underapplied or overapplied is close to the cost of goods sold. What's the journal entry? So the journal entry here, and you have a net debit here, right? Our journal entry to resolve, we have to bring manufacturing overhead to zero. So we're going to debit and a credit. We're going to credit manufacturing overhead for $5,700 to bring it to zero. And it's the cost of goods sold for $5,700. So what does it do? It decreases gross margin. That's in essence what it does. It decreases gross margin, it decreases net income. So a great little problem that helps you get used to understanding manufacturing overhead. Let's look at one last problem. And again, this is still job order costing. But now what we're going to do here, and did I photocopy the problem? 3-10, did not have it here. So we're going to pause this.